simply need to understand that there are two questions in the market: trending and consolidation phase. And now if it's trending, it's either going to the upside, which is bullish, or which is time to buy. And if it's trending to downside, it's simply going to be bearish or time to sell.
The first one is the technical and fundamental analysis, right? Now, that first one is what we want to battle down. Because what does that first one does for us? We need to learn how to predict this chart. You need to be able to interpret it. Because your primary work is to be able to forecast, okay, is this chart going to come down? Is this going to come up, go up? That is what technical analysis is all about. You understand? We just want to understand the charts. We want to understand how this thing moves. How do we buy and sell? Because the only thing you're doing in the market is either you buy or you sell.
For you to be able to understand the direction of the market, or for you to be able to predict where price is likely going to go to, or for you to know when to buy or when to sell, you simply need to understand these two things: market condition and as well market structure. I'm going to explain these things. I'm going to explain these two things in this video. Before going into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and as well show you the mindset behind my trading. If you want to see content like this, I want you to like, subscribe, and as well drop a comment. Now, the first one, which refers to as market condition. Now, market condition is simply the state, or let me use the word condition, that you see the market in once you open the chart. That means once you open the chart, the market is likely going to be in a certain condition. And now it can actually be in a trending condition, or it can be in a consolidation state. Consolidation. So what this means is that whenever you open the chart, either market is trending or market is consolidating. Now, if it's trending, it's simply creating highs and lows. And now, if it's consolidating, it's simply in range. And the range simply means it's simply going from one particular high to a particular low. It's not creating new high and new low. It's just creating a high and a low. It goes from this point to this point to this point. So it's consolidating, or you can call it a consolidation state. Now, for us to be able to understand this trending phase and consolidation phase, we simply need to understand that once price is trending, once price is trending, it can be trending to the upside, or it can be trending to the downside. If it's going to the upside, it refers to as bullish. And if it's trending to the downside, it refers to as bearish. And if the market is bullish, what you want to do is what? You want to buy. And if the market is bearish, what you want to do is you want to sell. Is that clear? Yeah, it's clear. So once you come to consolidation phase, the market is simply in a ranging phase. So it's simply going from one high to the next low, this high to this high. It's simply moving like this. It's just in one point, going from one high to the next high. And the best thing to do in this point is to simply wait. Is that clear? So for me to summarize or make you understand market conditions, you simply need to understand that there are two questions in the market: trending and consolidation phase. And now if it's trending, it's either going to the upside, which is bullish, or which is time to buy. And if it's trending to downside, it's simply going to be bearish or time to sell. And for a consolidation phase, it's simply in range, going from one high to the next low, from one low to the next, from one low to that same low. So it's ranging. For you to understand market structure, you simply need to be able to understand one, condition of the market. Is price in an uptrend, or price is in a downtrend, or price is ranging. And now for us to be able to identify if price is in an uptrend, downtrend, or ranging, we simply need to be able to identify the highs and the lows in the forex market. And now for an uptrend, if price is in an uptrend, price is simply moving like this. And now for us to be able to be sure of this trend, we simply need to understand if price is making a higher high and a higher low, or price is making a lower low and a lower high. Now, for example, an uptrend, price is simply making a low, a high, a low, a higher low, a higher high, a higher low, a higher high, a higher low. So for us to confirm that this trend is an uptrend, we simply need to be able to identify the highs and the lows, the higher highs and the higher lows, the higher highs and the higher lows in the forex market. I'm only going to give you an example on this board, but later on in my personal video, I'm going to be able to identify this on the forex market chart. Now for a downtrend, price is simply going like this. And what price is simply doing is that price is creating a high, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. So for the downtrend, price is simply creating a lower low, a lower high, and a lower low. And now for us to be able to identify if it's a lower trend, we simply need to be able to identify the points where lower lows and lower highs have occurred in the forex market. Likewise, same thing with an uptrend. We simply need to identify where the lower low, the higher highs and the higher lows have occurred in the forex market. Now we have solved for this one. And I simply said that for us to be able to identify if it's an uptrend, simply need to identify all of these things in the forex market. For most of this on the chart in my subsequent video. And now, if price is an uptrend, we simply want to be what? Bullish. If price is an uptrend, we simply want to be bullish. That means we want to buy. And if price is a downtrend, we simply want to what? We want to sell. Now, if price is ranging, price is simply moving like this, moving from one point to the next point. This is a high, this is a low. So price is simply moving from this high to this low, from this high to this low, from this high to this low. This is referred to as the ranging phase. So price is neither creating a higher high nor creating a lower low. Price is simply in the ranging phase. And the best thing to do when price is in this phase is to simply wait. That also has to be if price is ranging, simply wait. And if price is an uptrend, you buy. If price is a downtrend, you sell. Now, that takes us to the next one, which refers to as patterns. Now, pattern is simply telling us that if price is in an uptrend, what pattern is making? Is price continuing the uptrend or price is reversing to the downtrend? So for pattern, we simply want to identify if price is what's wrong with this? For pattern, we simply want to understand if price is continuing a trend, or price is reversing. So for patterns, just simply looking at for continuation patterns or reversal pattern. And for us to be able to identify if price continuation is this price is a continuation pattern, we simply want to understand break of structure. That is BOS. And if price is about to reverse or price wants to reverse, we simply want to check for change of character. Now, these are the two things you want to understand or you want to use to understand pattern price making. For instance, if price is moving like this, uptrend, downtrend. Now the point where price gives us a higher high here is referred to as a break of structure. Now again, here as well to break of structure. Here as well, break of structure. This signifies continuation. So once price gives us a break of structure, He's simply telling us that price is about to continue direction of the market. Now, at this point where price broke below this low here, is referred to as change of character. Why? Because when price was giving us this break of structure, price was giving us series of lows here. This low could not take out this low. This low could not take out this low. And finally, this move here took out this low. So this point that price took out this move is referred to as change of character. Simply showing that, okay, price has changed or reversed its character. It's no longer an uptrend, but it's a price is a downtrend. The difference between a break of structure and a change of character is that a break of structure is simply a continuation pattern, whereas a change of character is simply a reversal pattern. We are going to look at these things on the chart when we open our trading view in my subsequent video. But for that, let's go to the next one, which is referred to as formation. Now, formation is simply what tells us that, or what gives us the information that a continuation pattern is going to continue, or a reversal pattern is going to be reversed. So formation is simply a series of candlesticks that tells us that, okay, this pattern is going to continue to the upside, or this pattern is going to reverse to the downside. So it gives us a confirmation in the first market. And now it can be an M pattern, or it can be a W pattern. As well, it can be a bullish engulfing candle. It can be a bearish engulfing candle. It can as well be a pin bar. It can be a shooting star. It can be there are plenty of them that you can go and research on your own. I don't have them off head, but if I see them, I can be able to identify them. But most important thing I want you to understand is bullish engulfing, W pattern, and M pattern. Now, for M pattern is simply telling that a price is an uptrend is likely going to reverse to the downside. W pattern is simply telling that a price that's in a downtrend is likely going to continue to the upside. A bullish engulfing is simply saying that a downtrend is likely going to become an uptrend. Now, a bearish engulfing is telling that an uptrend is likely going to become a downtrend. Now, this pin bar is telling that depending on how it's formed, depending on the price is likely going to go down or price is likely going to go up. These are essentially the same thing, and they will have the dodgy candle. And when a dodgy form, it simply means indecision in the market, indecision. So these patterns or this formation are simply what gives us the confirmation that a pattern is going to reverse or a pattern is going to continue. There are plenty type of candlestick formation I didn't talk about in this video. I will give you the most important one: MENTORSHIP, the M pattern, W pattern, bearish engulfing, pin bar, and shooting star, and I've seen what it means. So if you have anyone I didn't mention, write in the comment section and tell me one I didn't mention. Now, to summarize everything I've said in this video, for you to understand market structure, you simply need to understand the condition that price is making, trend, uptrend or downtrend. The pattern, is it reversing or is it continuing? Formation gives us the confirmation of what is going to go on in the forex market.